Hello, so this is for the subject Monetary Policy and Central Banking, and the topic of this video is Central Banking for Socio-Economic Development. Okay, so we have here some sort of research by Gerald Epstein. The title is Central Banks as Agents of Economic Development. So you can find this from scholarworks.umass.edu. Okay, I think this is University of Massachusetts Amherst. Okay, so we'll focus on page 17 of this document, although you can read as early as page 13, I think, for a background on, the Western central banks and their development. But this one here, central banks as agent of development in developing countries, okay, because our country is a developing country. Okay, so before we proceed with the article, let's just define socio-economic development. So it is the process of social and economic development in a society, measured with indicators such as GDP, life expectancy, literacy, and levels of employment. Okay, so economics-wise, so GDP, measure of economic growth. And then in addition to that, since this is socio-economic development, so we have life expectancy, literacy, and levels of employment. Although, monetary policy, one of the goals is to reduce unemployment or to, increase the employment rate of its citizens, right? So as the main purpose of the monetary policy being implemented by the central bank is to have a stable pricing for goods and services, right? To control the inflation rate, to ensure the purchasing power of the currency, okay? But other than that, of course, the other goals of central banks in their, monetary policy is to, stimulate economic growth, to contribute to the economic activities, allowing businesses to expand their operations, which would translate to providing more employment, so contributing to employment levels, right? And then to review, of course, central banks, they are the regulatory body supervising and monitoring the activities of financial institutions, especially banks, okay, because they're the larger part of the financial system. So again, we have financial intermediaries, and they connect those people with excess money and those who are in need of funds for their, businesses or personal expenditures, okay? But they do have a process on how the money that they have in, these financial intermediaries would be allocated to the different industries of the borrowers, the businesses that are in need of money, okay? Sometimes the countries or, the government would, make a priority, okay? They would list out certain industries that they would consider a priority for, let's say, a fiscal year, okay? And with that announcement or with that pronouncement by the government, the central bank, the Bangko Sentral ng Pilipinas, would of course encourage the financial institutions to be supportive of those priorities, okay? So when they lend out their funds to the borrowers, they would allocate, let's say, majority of the funds to the industries that have been identified by the government that will, contribute to the economic growth and development of the country. Or sometimes, they have other factors that they consider when choosing the priority, of course. But there is a particular department that is responsible for identifying the economic needs of the country, and so they're the ones recommending those priorities, right? And in a way, they have this thinking that providing help to these prioritized industries would contribute the most to the economic growth and development of the country, okay? So more likely the prioritized industries are in the manufacturing industry or in the construction business, because the infrastructure, roads, buildings, especially roads, those would help in easing the transportation concerns of most businesses in distributing their products. So having the infrastructure available for that could lower the shipping costs or the costs related to the distribution of products, which would in turn help in lowering the cost of those goods and services. And as such, with the ease of the distribution through the infrastructure, it could help businesses to produce more so that they could distribute more and that they could reach more places for their goods and services. Okay? So it would help most of them, or almost everyone along the way. So you have your businesses being able to increase their sales and because they could reach more places, and then that in turn would require them to hire more people so that they could produce more. Okay, and then on the part of the community, it would help them because it could lower the prices of the goods and services. So instead of them going to the market or the nearest city to get the products, it's possible now for them to, for those products and services to reach their particular areas. Okay, so the projects of the government, especially the infrastructure, the build program of the current president, it is helpful, right, for businesses and the community as well. Is a business in a way, and so it also contributes to the employment. Okay, it was specifically stated, right, as a goal of the monetary policy that to help increase the employment rates or the employment levels, because helping people to have a job, that would in turn help them to get out of poverty, to support themselves, although it does redound to increasing the GDP of the country, which is the economic measure of growth and development. Okay, so in a way, that's just the process of how central banks support the socio-economic goals of a country, or the socio-economic development. Okay, of course, we have the LBP, who are catering to fisher folks, farmers who normally couldn't get funding or couldn't find financial resources from other commercial banks. And then we also have DBP, who are supportive of small and medium enterprises. So those are, mandated, in a way mandated by the government, right? Okay, so let's read this research. So essentially for the introduction, it started with the Second World War. Okay, so we have the Great Depression in the early 1900s. And then there's also the World War near the middle of the century. Okay, but essentially during the war, there are a lot of countries who sustained damages. And that's just after the Great Depression as well. And so there was a major transformation of central banking in the developing world. And during that time, of course, there are certain things that they need to rebuild from scratch, infrastructure, of course, and then making sure that their basic necessities can be provided by local producers. So they focus more on industrial companies or industrial businesses. Okay. So can read this part. This one, let's read this one. During the past decade, there has been a marked proliferation and development of central banking facilities in the underdeveloped countries of the world, along with an increasing resort to the use of monetary policy as an instrument of economic control. Since 1945, central banks have been newly established and pre-existing ones thoroughly reorganized. Okay? In no less than some 25 underdeveloped countries. In other cases, the powers of pre-existing central banks have been broadened. In large part, the recent growth of central banking in the economically backward areas has also reflected a desire on the part of the governments concerned to be able to pursue a monetary policy designed to promote more rapid economic development and to mitigate undue swings in national money income. Okay. Bloomfield goes on to describe the functions, powers, and goals of the central bank. So many of the central banks, especially those established since 1945, with the help of Federal Reserve advisors, are characterized by unusually wide and flexible powers. So, they're just starting out and they're just trying new policies as well. So, a large number of instruments of general and selected credit control, some of a novel character, are provided for. Powers are given to the central bank to engage in a wide range of credit operations with commercial banks and in some cases with other financial institutions. The regulation bit came much later. These and other powers were specifically provided in the hope of enabling the central banks to pursue a more purposive and effective monetary possible than had been possible for most that had been set up during the 20s and 30s. For the most part, had been equipped with exceeding orthodox statutes and limited powers which permitted little scope for monetary policy designed to promote economic development and internal stability. Okay, so again, the focus of monetary policy is for price stability, right? Controlling the inflation, ensuring the purchasing power of the currency. But the other goals, they're not given that much attention. Okay. I'm gonna skip this one. Bremer and his associates describe a variety of techniques that central banks pursued in the 1960s. These included providing capital to development institutions such as industrial and agricultural development banks. So you have DBP for the industrial, and then you have your LBP for the agricultural, right? Extending credit to development banks and purchasing their securities, buying a small part of the equity of development banks, establishing a securities regulation fund to create a market for the securities of various development finance institutions by using the profits from the ordinary operations of the central bank. Okay, here in the Philippines, of course, we have DBP, which is already a government-owned and controlled corporation. Okay, so kumbaga, the government would be able to direct their operations because they are owned by the government. By using the profits from the ordinary operations of the central bank, using differential discount rates to allocate credit to capital development projects, the establishment of portfolio ceilings on activities having a low priority, various types of reserve requirements, including differential reserve requirements to influence the allocation of credit, using import deposit requirements, primarily intended to deal with balance of payments difficulties, to also influence the allocation of bank credit. Okay. In the case of commercial banks or those that are privately owned banks, of course, their main point is profit, right? That's their bottom line. But in the case of GOCCs, so they operate in a way that's supportive of the government objectives as well. So if the government has this particular project for their citizens or a specific group, then these GOCCs would have to, be supportive of those programs without thinking about the profit or the possibility of earning from those programs. Okay, especially if they are directed towards the low-income sector of the country. Okay, so normally, let's say you have your programs for the farmers, for the fishermen, we have the Poor Peace program as well. So in those cases, the GOCCs, Land Bank or DBP, they're not exactly earning money from those transactions or for those programs, but in a way, what they're trying to do is, to contribute towards the social economic development of the country. Okay, I think they're in a way, they're making it more accessible for the low income, what do you call that? Low income segment of the population to have access to financial services and financial products. Okay, to have access for funds which they can use in their activities. Okay. Okay. Central banks played an important role in accommodating the development-oriented policies of the government. Most kept effective real interest rates, often low, negative. They also use capital controls to insulate domestic markets from hot money flows that could lead to overvalued exchange rates. Hot money is foreign investment. Furthermore, central banks also played an important role in the off-budget financing of a number of these countries using the techniques described by Bloomfield and Brimmer. Experiences were not all unqualified successes. Still, in many cases, a part of a government policy helped underwrite significant economic development in many countries. Okay. So for the conclusion, has argued that virtually throughout the history, central banks have financed governments, used allocation methods and subsidies to engage in sectoral policy, and have attempted to manage the foreign exchanges, often with capital and exchange controls of various kinds. The current best practice recipe then goes against the history and tradition of central banking in the countries now most strongly promoting it. Okay? The question is not whether central banks have or should pursue development policy, but rather what kind of developmental policy should they conduct. Here, history gives some guidance. Central banks have been most effective in helping to foster development, especially in late developers where they have been part of the governmental apparatus of industrial policy. Okay. When the government, deliberates on which industries would need, some focus or some help on. So of course, they would also consider the capability that we have locally, the possibility of importing certain products or services instead of locally producing them. But of course, there would be limits because they have to protect the local producers if there is an existing producer locally, right? Or domestic. Okay. What else? Throughout history, a continuing tension has existed between the development roles of central banks and the stabilizing roles. Okay. Stabilizing rules, making sure that the inflation rate does not go over the targeted rate, right? But normally when they try to stimulate economic activities by infusing money into the market, allowing businesses to improve their operations or expand their operations, sometimes that would lead in a way, increasing the inflation rate. So sometimes they would have to, control it very carefully so that they could get a balance between the development roles and the stabilizing roles. Okay? There is little evidence that the optimal solution to this tension is to abandon the developmental role entirely. Worse yet is to do as many central banks under IMF tutelage have done, follow the lead of England and US, and focus on its developmental role entirely in promoting the financial sector. Okay, this is what England and US have done before. They focused on the financial sector, okay? Especially the fashionable stock market-based financial sectors. There is little evidence that the stock market-based financial sectors promoted these days in many developing countries leads to faster economic growth or more development. I don't know. Here in the Philippines, of course, the stock market is a secondary market. So any exchanges would not in any way lead to additional capital for the issuing company because the exchange happens between, investors and investors. So how? Worse yet, promoting financial sector through internal and external financial liberalization can make developing countries highly vulnerable to financial panics and crises, as we saw with the Asian financial crisis. Thus, rather than solving the tension between the developmental and stabilization central bank roles, this financial sector promotion approach associated with financial liberalization and neoliberal central banking poses the danger of making the tension even worse. Okay? This is what happened in, the 2008 financial crisis, right? There's so much focus, or in a way, the financial institutions had a lot of activities, and they tried to pursue, a certain financial product, but didn't end well. So there is that. Okay, so in conclusion for this video, although the central banks, the monetary board, they implement the monetary policy mainly to stabilize the price and to control the inflation, in a way they also contribute to the socio-economic development of the country by contributing to employment, okay, by supporting businesses and their operations, which then translates to employment levels. And of course, in a way, it's kind of not entirely related, but it's a different concept, right? The concept of corporate social responsibility, in which we are trusting that large companies do have a CSR program, which gives back to the community, which tries to support the community. They are, what do you call it? The large businesses, in a way, because of the concept of CSR, and the general public is now more concerned about businesses not only focusing on the bottom line, the profit, that they're also, giving back to the community. They're supporting the community by either environmental advocates, or providing livelihood programs, or supporting the youth for, scholarship programs. So in a way, that would also help uplift the community and contribute to the reduction, if not elimination, of poverty, although it has very little effect, but the effect is there. But of course, the main, not really main solution, but in a way, they believe that providing employment would be a solution to eradicating poverty, because if everyone, not exactly everyone, the adults, right, the working class, would be able to get a job that would help them support their daily needs and their families. So that would be a great contribution to the socio-economic development of the country. Okay. So that's it for this one and of the subject. Thanks and bye.